This episode contains discussion of personal and corporate tax and property investing. The information shared around these topics is for informative and educational purposes only and is not meant to be taken as professional recommendation. Any decisions you take are your responsibility alone, and it is strongly advised to do proper research and consult a professional opinion where applicable.
Welcome to episode 19 of the Multinational Money Podcast.
Welcome back to the Multinational Money Podcast. I'm Johnny, your host, and if you're interested in financial freedom, expat life, and making the most of global opportunities, then this is your podcast. In this episode, I'm joined by Simon, who is a qualified accountant in both the UK and the US. Simon is based in Spain and is specialised in helping people from the UK move over here and handle their tax affairs in doing so. And that's what we're going to discuss in this episode. We're going to look at the fiscal aspect of moving over to Spain with things like UK property, with pensions, inheritance tax, and a whole load of other things to keep in mind. So I hope you enjoyed this episode, guys. And with that said, let's get right into it. All right, Simon, welcome to the Multinational Money Podcast.
And thank you very much for having me, Johnny. It's a great honour.
Likewise. It's really great to see, obviously, what you're doing in the UK with your firm. And now, obviously, you've recently relocated to Spain, if I understand correctly, and you are taking on more British clients who are looking at moving over to Spain. Isn't that right?
Well, I think it's fair to say I'm bringing them all with me. I think people are sick and tired of the British weather and the tax system that goes with it.
Yeah, it's a very fair comment, I would say, yeah. So before we get into kind of the discussion today, why don't you tell us a little bit about yourself and how you started in the accounting world and a little bit about that journey from working with UK clients to bringing them over to Spain, as you described it.
Yeah, thank you ever so much. So I am a UK chartered accountant. I've been focusing on tax for the last 15 years, 20 years now. I've very much been interested in moving around different countries. So one of my journeys was to move to the US. I have a US business. And the thing about moving around is that you get to understand different tax systems in countries and how not only about the international country that you're going to, but how HMRC treats you as well. And you have to take it from two different points. So the reason I'm bringing this up because I became a US qualified tax advisor as well. For the simple reason is that I moved to the US and both when I was talking to US CPAs and UK accountants, that so-called international tax perspective, they was telling me some really interesting subjects and facts that I had to re-quote back to them to say how wrong they were. I had 3 refunds out of 3 expenses, and then 2 years later, I qualified. So, and simply because I just felt as though international tax advice was so badly done. And I saw the same when I came to Spain. So I've been in Spain now. This might get into my 4th year of being in Spain. And again, similar kind of journey of listening to people talk about the US taxes, the same in Spain. And now, in fact, it's probably made worse because it's in a different language. So it's tricky to understand, A, what is right. But then I do find that some... when you talk to immigration lawyers in Spain who are not focused purely on international taxes, they will give you what they know, but it won't go beyond that. And I think that's the difficulty that Brits will have, is that you come over to this country and it's very difficult to do any fact checking. So here I am in Spain, and I'm now helping Brits really understand their tax liabilities in the UK as well as Spain.
Yeah, it's a very good point that you make about international taxation as well. And even the ones that do, it tends to be that they have knowledge about very specific countries, like yourself with the UK and perhaps a little bit the US as well. But, you know, you can see a range of different scenarios and, you know, it's very difficult to be able to help everybody effectively, I would say, unless you're in a very specific niche.
Yeah. Just to add to that, though, I do find that I always find on LinkedIn, especially, and you find, oh, I'm an international tax expert, and you kind of think, okay, well, what does that really mean? And what I've found over my painful journey of trying to get some international tax advice for myself years and years ago, that it really just means that, oh, you're from another country, and now I understand how you must report your tax in my country. But it doesn't necessarily mean they know your tax legislation and references from the country you're leaving. So I think the word international tax advisor really is artfully vague, and you have to be very careful when you take some advice. I would never give tax advice to people outside of those three countries, US, UK, Spain, because I don't know enough about the other countries that people might come from. So I'm very much a niche area of advice, I've got to say.
Yeah. But I think it also can work in your favor. You know, if you know those countries specifically, then people from those countries, like, they know that, you know, Simon's the guy to go to in that respect. Not a plug or promotion or anything like that, but you get what I'm saying, of course.
Yeah.
So yeah, that's what we're going to talk about in today's episode, is kind of those people from the UK or people who have interests in the UK who are relocating to Spain, and how the tax obligations and taxation works in that sense. So maybe you could start with a brief definition of who is Spanish tax resident in the eyes of Hacienda.
Yeah, so, and that's an interesting one. In each country you're moving to, it's kind of different. You have to be careful. There is this myth of the 183-day rule, and that's true to a certain degree when it comes to Spain. But for other countries, it's not always the case. So in Spain, you can be tax resident once you've been for 183 days. You could also have family here. So if you're moving in with family, you're getting married to a family home, then you could be tax resident for that. Or indeed, if you've got business activities going on, your economics activities is here in Spain, then that could also trigger you to be a tax resident. But for most people that are looking at it from outside in, you are not going to be tax resident unless you've been in the country for more than 183 days, which, an interesting fact is, if you've been in the country for 183 days, unlike the UK, where you have this split year treatment, whereby if you come in the second half of the year, you're only tax resident in the UK for the second half of the year. In Spain, once you're tax resident in the year, your entire year of income is going to be taxable in Spain.
Yeah, that's it can be quite a hit as well if you're not ready for it and if you haven't planned accordingly. But then, of course, the UK and Spain have a double taxation treaty as well, and I guess people can leverage that to somewhat offset what they may incur by becoming Spanish tax resident for the year.
Yes, that's right. I mean, that's a great example. So if you were in the UK, let's say from April to June, and we'll talk about calendar years because that's going to be interesting as well, is if you're from April to June and you paid tax on PAYE, pay as you earn as an employee, then you've already paid tax. But then if you move to Spain before June and you become tax resident, of course, then you've got those months that you've been taxed in the UK as well as being taxed in Spain. But you can use the foreign tax credit. So any tax you suffered in the UK, suffered is a great word, isn't it? But if you tax suffered in the UK, you could get the tax credit in Spain. So you're not going to be double taxed in that regard. But let me just come back to that point about calendars, because this is also an interesting one, is that the UK tax system runs from the 6th of April to the following 5th of April. But if you're looking at from Spanish tax system, it runs on a calendar-based system, which is a lot more logical in my eyes, from January to December. So when you're doing your tax returns, you have to be very careful because you can't just take the same information that you have on your UK tax return and then throw it into the Spanish one. So for example there, if you think, well, I've got a P60, I'll just give that to my tax specialist in Spain, that's not going to work because the tax year is wrong. So you have to pretty much get your 12 months pay slips and then throw that into Spain if you were going to do it that way. So you have to be careful.
Yeah. And so once someone has moved to Spain, do they still need to file a tax return in the UK? Thinking about this split treatment and, differences in tax years maybe, or if they've got interest still in the UK, in which cases would someone still need to submit a UK tax return?
Great question. And I think that's the answer to that. I hate this saying, but it depends. A lot of accountants do say that. It's like the biggest cop out in the world. It depends. But it really does in this matter, because if you're leaving the UK, you have no more assets in the UK where it generates an income. You're not going to be considered self-employed in the UK anymore. You're not employed, and you're going to be continued to be employed in the UK, because that can happen. Then you've got no income for UK tax purposes, so you wouldn't necessarily need to do a tax return. Now, does that mean you shouldn't do a tax return? Well, the thing about that is, for many people who have just left, so again, going back to that point of if you move to Spain in, let's say, June, well, then you've got 2 months of earnings that you would have in the UK from April, May, and part of June. And you would then have to declare that income to HMRC for them to do the correct tax calculations. So again, if you've been self-employed in those couple of months, then you would still have to do your tax returns. For many people though, like myself, who have a company in the UK, you may have to carry on doing your tax returns forever, especially depending on how many days you go back to the UK. Just because you're tax resident in Spain doesn't necessarily mean you're not tax resident in the UK, which is probably too complex for this podcast today, but you could easily be tax resident in the UK if you're not careful.
Yeah, if anyone is interested, I made a whole video about how the sufficient ties test in the UK works.
I saw that. Yeah, you did a really good job. And the reason why you did such a good job is because it is so complex to follow. So you did superbly well, and I smiled because I was so glad I didn't have to do that.
Thank you so much. A lot of people who moved to Spain from the UK, certainly in the past, still obviously some now, like post-Brexit, but perhaps not in the same numbers, will be moving to Spain and receiving a pension from the UK. So how is that taxed? I understand, from what I've read, I could be wrong, that you can request no withholding on the pension in the UK and then pay tax in Spain. Is that correct?
That is correct. And one thing I would say, I'm not a financial advisor in any way, but you are really advised to speak to your financial advisor in the UK and one potentially in Spain as well. The reason for that is because you will have personal pensions that are going to be in a particular wrapper of some sort, and you need to disclose that it's on your Spanish tax return as well. The one thing about pensions and tax is that you could get your private pension income to you in Spain tax-free, as you've just mentioned. However, the government pension potentially would carry on taxing your state pension in the UK. So that's just one thing. Now, I doubt it's going to affect many people, because what they're trying to do in the Labour Party is raise the personal allowance to more than cover your state pension anyway. So that may well be a thing of the past. So in a nutshell, all of your pension income will be paid to you gross from the UK.
Okay, that's interesting. I am going to come back to something you said. You said you needed to declare your pensions in the UK to Spain as part of like the basket they're in, essentially.
Yeah.
Are you referring here to like the 720 model, or
Correct.
are you you're referring to the 720 model as well? And an interesting point that came to mind as well is when we think about Spanish pension plans, they're obviously taxed not only as employment income, but also on the capital gains that have been made on the pension plan over the time. Yeah. Is that the same case with the UK pension?
I think they do. It depends on the type of pension, in all honesty. So some of them are based on wrappers, some of them not. So I think, again, back to my point, if you have an occupational pension scheme versus a SIP pension, which has got stocks and shares, then they are taxed very differently in Spain. So it's probably a little bit more complex than you really want to get into for today's episode, I would have thought.
That's true. Yeah, yeah, absolutely. Yeah, we won't scare too many people off.
Yeah, I think that could, you know.
Yeah, yeah. All right. Capital gains on UK property or investments that we have in the UK. How are they taxed in Spain?
Yeah, you know, there's an interesting one that I had a case where people are selling assets, and the question needs to be to me is that when should I sell assets? Before or after I become tax resident in Spain? And there are invariably benefits of choosing one or the other, depending on your circumstances. The one thing I would say about selling property, especially your home, is that if you're not careful, you could easily sell an expensive home in the UK, become tax resident, and I'm talking about selling your UK home whilst you're in Spain. For instance, you may rent it out for a period of time. And unfortunately, if you do not reinvest all of that money into another Spanish property, you could be hit with a huge Spanish capital gains tax, even though in the UK you could be covered by private residency relief. So there is a danger that people assume that the things like home exclusion or private home allowance in one country works in Spain, and it doesn't. And you have to be very, very careful not to be hit with a unsuspecting capital gains tax liability in Spain.
Yeah. My understanding is that the time frame is 3 years in Spain to reinvest that money essentially in buying new property.
Yeah.
And speaking to you now, I understand. So this obviously extends to the EEA, but I understand from what you're saying now, it must also extend to non-EEA countries.
That's right, yeah. But the key thing about that is a lot of people that will move to Spain will want to do a lot of renting to begin with. So that's the problem with this, is that you may not have that time frame. You may not want to commit that level of money. And people that will come to Spain will look to downsize anyway. So people that are looking to, they've got rid of the younger generation, you may not want to be buying. That's one side of it. But someone that is looking to, I've got rid of my kids, yay, they've gone. And now I'm in Spain just relaxing in my retirement. You're not going to be buying the same size house that you may have had in the UK.
Yeah, that's very true. I think, if you're in that situation, it's not a recommendation or anything, but a suggestion perhaps is like, come to Spain and visit and understand what areas you like of the country, if there's particular neighborhoods you like, so that you are able to make that decision quicker when it comes to buying a property, selling a property, if it comes around to that. Maybe that's the way to go about it.
Yeah. And the same applies for stocks and shares. If you have stocks and shares in the UK, the one thing I would say to people is, look, try and dispose of those things. If you're planning on disposing of them anyway, don't wait until you're Spanish tax resident, because you may have more additional taxes to pay in Spain than you would in the UK. So it's always better to do things where you've got a nice cut-off. But get some tax advice just to understand your position for your situation with all your assets. Should I sell now? Should I not? And the one other thing to say is that people don't necessarily have to sell their home or sell their buy-to-let property investments in the UK. You may want to keep them, but you do need to bear in mind that you have to then report the income both in the UK as well as Spain.
Yeah. And where would that income be taxed? Would it be taxed in Spain or would it be taxed in the UK? And then you would request relief in Spain? Yeah,
you would be taxed both. Typically for many people, that wherever the asset is, and in this case it's property, the asset is going to be in the UK. So it's going to be taxed there typically. And then you would get the foreign tax credit in Spain. And the one thing I would say is, if you have got that situation going on, you want to do your UK tax return first. And the reason for that is because then you know what your tax is going to be to reduce your Spanish tax liabilities. The painful situation I see is that they try and do the Spanish tax return first because they've got a longer period of time to do the UK tax return. But that's the mistake, because now you don't know how much tax you should be reducing in your Spanish tax, and you may well be overpaying.
Let's come back to something that you mentioned before as well about capital gains, dividends, all this kind of stuff. Of course, the ISA is, in my opinion and that of many other people I've spoken to, like one of the best tax shielded investment products, if not in Europe, definitely, perhaps even in the world, in terms of what it offers. But Spain doesn't obviously recognize that same tax shield.
No.
So you won't be able to get those benefits if you're living in Spain. And it might make sense for someone to clear house with their ISA before coming over here to be able to get those capital gains dividend tax exemptions.
Yeah, I think that's a great point. And I think that, again, brings that beautiful phrase up, it depends. The reason why I say it depends because if you divulge your ISA accounts in the UK, bearing in mind that you've got an allowance of £20,000 in a year for ISAs, the danger is that you close them down and then bring your money to Spain because you don't want to do the reporting in Spain. And I get that because it's tax-free in the UK, but not tax-free in Spain. You'd have to then go do some quite meaty reporting for Spanish taxes. But the one thing I would say is if you take it all out of your ISA and then you decide to move back to the UK, you've kind of shattered something that was working really well. So again, if you're moving to the UK, maybe your ISA account, just leave it where it is and then really decide where you see your future. And if you do say, well, Spain is it and we need to do something different, then you could make some investments in the Luxembourg, again, probably outside of this context, but you could do some nice Luxembourg investing, which it could be tax-free, which is very similar to an ISA in the UK. So you could do that long term if you decide to stay and live in Spain. But if you're not sure, then maybe just leave your ISA where it is.
Okay, yeah. Another key point as well is obviously you can't contribute to your ISA by not being a UK tax resident as well.
That is correct, definitely, yeah.
Yeah, so people should plan accordingly before moving to Spain.
Yes, maximise your contribution before you leave for sure.
Absolutely, yeah. So Simon, can you tell us a little bit about the typical rates on dividends, capital gains and interest in Spain?
Yeah, so the tax rates, funny enough, for UK and Spanish capital gains tax rates aren't so dissimilar for disposals. So that the top end that you end up paying is about 28% in Spain, which if you look at the way that the UK is now gone, the capital gains tax rate in the UK is about 24%. So it's not too dissimilar in all honesty. Where you do have a difference is on dividends now. The UK is actually, and this is the misconception that people have, is that people think that Spanish tax rates are higher than UK, and that's not always the case. When I do things by luck more than by judgment, if I'm totally honest with you. So I moved to Spain not knowing at all that my income tax on dividends was much lower than the UK. So as a high rate taxpayer, I was paying something like 33% in the UK versus 28% in Spain. So again, the rates are much lower in Spain than they are in the UK. So again, what you need to do is do some really good tax planning in regards to how you get paid. So one of the things that people may have is that if you've got a diverse property portfolio where you've got interest, and interest could be subject to income tax in Spain, and as you know, it could be up to 50%, if not a little bit more than 50%, depending on the kind of rates of your income tax rates, self-employment, employment, that kind of thing. But if you've got something like capital gains tax, then the actual rate could be only marginally slightly higher than the UK. It's not too dissimilar. Compared to if you have stocks that pay you dividends, you'll actually pay less income tax on those dividends than you would in the UK.
Yeah. From my understanding, I think interest goes through like the savings base, so it would only go up to that 20% rate. But what does go through the general base, which is where employment income goes through, which surprised me actually, is property income. I would have thought property income would have gone through the savings base, but turns out
property income is no different to the UK though, so that will go through income as well.
I see. Okay.
And just think about the UK and Spain, the way they work. So self-employment, both income streams, income tax, employment income tax, rental income, it's the same. Interest, the UK has different bands for that because you get different allowances in the UK. And in Spain, it kind of, back to your point, goes into that savings allowances instead. Disposals on both the UK and Spain is capital gains tax, and then dividends is, again, in the UK, it's got a totally unique system for that. It has got its own bucket of dividend income tax rates, where Spain goes into the savings accounts rates.
Okay. And maybe to bring everything together, we obviously had this conversation when we caught up last week, but and it's building on something you said earlier as well, is that you don't think that Spain is a high income tax country like many people think it is. Could you expand on that a little bit?
Yeah, I think the tax rate in Spain obviously goes up to closer to, depending on, and this is probably where we have to be a little bit careful, is that in Spain you have the countryside, and then you've got the 17 autonomous regions as well. So there are slight variations, and the one thing I would say about Spain is that the tax system does change quite frequently. I'm not sure if you've noticed that. But depending on inheritance tax, capital gains tax, or income tax, they do change them, depending on, especially where you are from, Madrid, where if they want a new footballer into their club, they will change the tax system just for that one player. So there is a lot of politics that's being played. So from the UK tax perspective in Spain, you do have to be a bit careful, because UK, you've got one tax system, it's nice and easy. In Spain, you've got the income tax, you've got wealth taxes, you've got inheritance tax, and they all differ between the different regions. But in terms of the tax rates, I would say that the UK's top tax rate is 45%, but more closer to 50%. In Spain. But again, well, one thing I would say to you is that if you structure things correctly, and I'm talking about dividends here. So my structure, I'm going to be totally open with you, but my guys run the business in the UK. I'm pretty much the face here. Not most prettiest faces, I've got to say, but I'm the face of the company. But the way I do it is that the profits are taxed in the UK, and then I receive dividends again at a lower income tax threshold, or let's just call it tax threshold, in Spain than if I stayed in the UK. So again, that's my point, is you can structure things correctly whereby you're not going to be subject to high taxes. And you could complicate this further, and I'm not going to for this show, but one of the things that people should look at is, depending on which country you're coming from, that you should look at company structures as well, because company structures works really well in Spain as well as it does in the UK.
Yeah, disclaimer, not tax advice, but yeah, 100% something worth considering.
Yeah.
You mentioned inheritance tax, something that some people coming from the UK to Spain may be dealing with. We obviously, in the UK, above a certain threshold, like there's a pretty big inheritance tax bill. How would that work for people who've moved to Spain and maybe are inheriting UK assets?
Yeah, so one of the things that I was surprised about, and I'm not sure how much you've gone into this and then been surprised about as well, but in the UK, the person dying has to pay the inheritance tax, or the estate does. So you pass away, the asset goes to someone looking after your estate, and inheritance tax is paid. And typically you've got this £325,000 lifetime allowance. Anything above that is subject to 40% tax. And when I came to Spain, I quickly realized it's not the person that is dying it pays the inheritance tax, it's the person receiving it. And I thought, wow, that's interesting. There are totally different systems at play here. Is there a fundamental issue? And then you dig deeper and you realize, yes, because there's 17 regions in Spain all deploying their own tax law. So where you are in Madrid and where I am in Andalusia, we're quite fortunate that, you pretty much at this point in time, you've got a glut of tax-free income, and then anything else after that could be quite a more different rate compared to a place like Barcelona, where inheritance tax rates are very, very high. So you, again, when people talk about moving to Spain, you need to think about where in Spain, because you could be subject to huge wealth taxes. You could be subject to huge amounts of inheritance tax. And the one thing that really fascinated me was the fact that you could have parents moving to Madrid or Andalusia, where the inheritance tax rates are quite favorable, I would say. But then the kids go to Barcelona and then get hit there. And it's like, wow, okay, you've really now got to be careful of not only where your parents are, but where you as a child live as well, because it's going to be you that has to pay that tax from just your parents. So it is quite a confusing one. I have had quite a few cases as well whereby it's a parents that in the UK we may use trusts. So we have assets, we put them into some sort of safeguarding trust, but the Spanish tax authorities do not see trusts, they see straight through them. So where people think, oh, I'm going to use a trust because that's quite clever, it's actually quite dangerous in Spain, because they will just ignore it and say, right, well, actually, we're going to take the tax now, which could result in double taxation. There aren't going to be times where you have a trust, it doesn't pay inheritance tax for one reason or another, because you might have done gifts or so on. But then the person in Spain, after you died in the UK, your children in Spain may still have to pay inheritance tax, and you may not get a credit for it. So it can complicate things, and the world of inheritance tax, whether you're in Spain or in the UK, or you've got assets in Spain, it's quite complex, and you just need to be very, very careful. So even for people that have got elderly parents, you as children, and if you're bringing up a young family, you really need to look through those three generations and say, all right, how do we execute, wrong word, execute, isn't it? But how do we look at the kind of tax planning and make sure that we get it right? Because it's so complex, and I've done maybe 3-4 in recent times, and I just thought, wow, these guys are in trouble if we're not careful. The one thing I would also say, sorry to add on, but if you have a will in the UK, you need to make sure that you have a will in Spain as well. And the Spanish will, you need to make sure it's written in such a way that it reflects or points to the UK will system. And the reason for that is because if you do not have a reference to your UK will, and you just get a normal Spanish will, some of your assets would drop down to your children straight away on your death. So that may not be your wishes. You may want them to go to your spouse on your death, and then on the second spousal death, then that's when the children get it. But in Spain, that's not the same way. So you have to be careful even with that.
Yeah, that's really interesting about the will system as well. And I remember reading about the trust setup as well. And it does seem like a very Anglophone concept, trusts. We hear it a lot in the US. We hear about it sometimes in the UK. But yeah, like the Latin world in that respect, it's even though a lot of the wording around trusts does come from Latin, it's not really recognized by countries like Spain. And another thing that I found interesting is when you talk about the difference in how inheritance works in the UK and Spain, is that you read stories in Spain of children that basically renounce inheritance because they can't pay the inheritance tax with what they have.
Yeah,
which is something that I'd never heard of in the UK.
Well, in the UK, we do have a very similar situation. So you can do a will variation within 2 years of death. So you can do that. And I've seen that happen. And funny enough, you mentioned that, because one of the things that I spoke with one of my clients is the parents died in the UK. One of the sisters was in Spain, and the other sister remained in the UK. And the Spanish sister, the sister living in Spain, she knew that she would have to pay inheritance tax here, right? But she was in the most expensive area, and she's going to be going back to the UK. And I said, well, if you've got a will variation, you could give it to your sister, and then your sister, hopefully, at some point in the future, can gift it back to you. So you don't have to pay that inheritance tax bill straight away. So again, that's why I say it's important to do some really good planning around your financial affairs to make sure you don't suffer taxes when you don't need to, either in the UK or in Spain, for that matter.
Yeah, that's very, very good information. We talked about the model of 720 like earlier in the interview as well. Can you describe what that is exactly for people listening?
It's wealth taxes. And again, I would say that we're not used to this in the UK where you have to declare your assets at all. Have you done one yourself?
No, I have not done one since I've been in Spain, as I don't meet the criteria to be able to do it.
Yeah.
But yeah, it's kind of, as I understand, it is for informative purposes. But of course, if you have a very large, portfolio of assets or whatever, then of course, the wealth tax could come into it.
The one thing I would say about the Modelo 720 is that it covers any assets held outside of Spain of beyond 50,000. Now, there is some complexities around this because even my Spanish lawyer and I had a debate about after Brexit, do your UK pension now need to form part of this 720? Because as part of the EEA, Europe, the UK didn't have to do any reporting on the pensions because it was covered by the same rules. But after Brexit, things changed. And there's still this whole, well, should you include your pension on your 720? Is it taxable for wealth taxes as well? So this whole debate that's still going on to say, well, whether you should do that. But I would say that if anyone that's living in Spain, you do need to do reporting on this 720. If you've got assets beyond 50,000 euros, I should say, not 50,000 pounds, then you would need to do some reporting on that. It's a relatively simple, straightforward form, in all honesty. The one thing I would say that we don't have that in the UK, so it will be an extra set of documents you're going to have to get to list all your bank accounts and investments like that, and then give that to your Spanish attorney over here. It shouldn't be too difficult, but you do need to get organised.
Yeah. And maybe one last question, thinking about tax and tax efficient investments. Is there anything equivalent or similar to the ISA here in Spain? To my knowledge, no, but maybe you know something different. The closest I can think of is like the pension plan contributions that you can make, but it's in no way comparable to the tax savings that you make with an ISA.
Yeah, there are different things. So I'm working with a wealth advisor at the minute. Interesting enough, they're British wealth advisors. And the nice thing about Spain is that you can move to different countries with your investments. In Luxembourg, you can make an investment that very much compares itself to a trust, would you believe? So you can make an investment, and it is a wrapper. So it goes into a Luxembourg investment. Spanish almost feel that when I look at the legislation, that I don't want to say turn a blind eye to it, but they don't look at it as something that they will scrutinise or tax. So I'm not saying it's against the law or anything like that. It's all part of European law. But Luxembourg investments is like a wrapper. You can put investments in. It can grow, no income tax in Spain. It can have gains, no capital gains tax in Spain. Again, you have to work with a very good wealth advisor. Again, it is a regulated product, so I can't really talk about it too much. But one thing I can say to you is that it is worth doing that for your loved ones. And you could do things like move or dedicate investments to your children as well. So it can circumnavigate some inheritance tax down the line as well. So do look out for that. So are there any equivalent to an ISA? Yes. Are they located in Spain? Not necessarily, but you can, like I say, the Spanish tax legislation laws recognize them, but they don't seem to tax them in the way that they might do for just pure Spanish investments, which I find bizarre.
I'm going to look into this myself after we finish here, because this is something I did not know about.
Yeah, I'll send you the details for that.
All right, Simon. So I think that brings us to the conclusion of this part of our discussion. So we always end on like a fun question with all of my guests. And so you suggested your own fun question today, and it is, how do you pronounce your surname?
Yes, and I'm going to let you try.
So I think it was Misiewicz.
Very close. So it's actually, funny enough, and the reason why I'm laughing is because apparently I was cornered by a Polish person 3 months ago saying I say it wrong. So it's actually, I say it's Misiewicz, so Misiewicz, and they said, no, it's Misiewicz. So I was like, okay. Yeah, so I can't even say my own name apparently, so there you are.
Very good. For people wondering why I haven't said it in the intro, it's because we wanted to leave it as a surprise for this point in the in the podcast. All right, Simon. Thank you so much for your time, and these were some great answers. So thank you.
Thank you, Johnny.
So I hope you enjoyed this episode, guys, and found it informative and helpful. Remember, if you'd like to support the podcast and the work that Millennials Money does, you can do so by signing up as a channel member on YouTube or by becoming a patron. And as a thank you and in exchange for your support, you'll get access to exclusive content and benefits. With that said, till next time, I'll see you on the next one, and let's get this money.